Hello, traders. Nick Shaheen here. Benzinga and create income with option spreads at on marketfy.com. Recapping week ending May 30th and looking into next week, which should be a big week. Boy, this week did not disappoint. We had some good thoughts last week, and they definitely followed through. And we were on the money as far as what to expect. What we didn't expect was the confusion, the market confusion. We did mention last week that we had market confusion, however, not to the extent that we saw this week, especially today. Today was a perfect example where, for the past couple of months, we've had an inverse relationship between markets, how market equities actually are trading, and the TLT and the TNX. On one side, we had the TLT and the yen rising, and tick for tick, inversely, they will drop. The TNX would drop. Also, the markets would drop. So that relationship was as solid as can be. Last week, we saw hints of it breaking down. I noted it especially on Friday. This week, completely broken down. Uh, where it had hints, it did show up here and there, but it was more of the exception than the rule. Therefore, it's no longer viable. It's kind of like the markets are looking to see what they're going to trade next. In other words, they were good tells. If you watch the TNX, you could trade accordingly. If you watch the TLT, you can trade accordingly. But now they're broken. They show up here and there. So what do we watch? I'm still watching the yen, and actually I have everything on my screen. But the strongest sell today was the clearest move was inversely related TNX and markets, which is pretty weird. But nothing that I could bank on. Nothing where I can forecast moves. Still watching everything to try to pick up something. Next week, I'm sure we will pick up a rabbit. Usually, I call these rabbits. So let's look at what happened this week. I know this is a busy window, but it kind of tells the whole story. Number one is right here. If you can concentrate top left, we have the SPX, which I called the SPX a liar today because I just don't think it's representative of what's going on. Yes, there's no doom, but where's the rush? Well, what you can see, the chug was consistent. The bulls are back. I hear a lot of talk. A lot of people calling for all-time highs and even higher all-time highs, and I would say buy the dip, but there's no dip to be bought. Basically, it's buy the all-time highs. I'm not buying the all-time highs. I'm not standing in front of the bus either to try and short them. You can short it very cautiously via credit spreads and or debit put spreads that are cheap, but I'm not laying any giant positions ahead of this locomotive. 2013 taught us that this sometimes can be costly. However, today, Friday, the bears did their job. I said in the pre-open letter to members I expect the bears to try to do one thing today, which is remind the bulls that it's not all the way to the moon every time. It's not 2013. This is 2014, and the game is more even. We have good players on both teams. So that's what they did today. How did they do that? Well, if you looked at the upper box, now we look at the lower right-hand box, which are the small caps. The small caps reminded us that, first of all, they went nowhere this week. Barely green for the week, but nowhere really. But today was pretty negative. At one point, we were down almost 1% in the small caps. And this tells me that a big basket of stocks doesn't believe the SPX index, and in fact, the SPX can be moved around with a handful of stocks, biggies, whereas the small caps, the movement has to be across the board. Therefore, the conviction in the bullish run, the sentiment, is more believable than a handful of stocks running. So regardless, the Momos today got hurt, so that also tells me that it was negative sentiment. The NDX, the Nasdaq was positive for most of the morning, and I sent out a note saying it's only positive because Apple is up almost 2%, and if it's whatever 10-12% of the whole index, there you go. Take Apple out, you'll be negative halfway through between the SPX and the it was like minus 0.2% or something. Spitballing it. So what do we do? Who do we believe? The positive or the negative? Well, you can if you take both, you end up being cautiously optimistic. Everybody says that, but that's the figure of it. One thing tells you bullish, buy, buy, buy. This one tells you maybe not. So you buy cautiously. If this one said sell, then you don't know. Buy or sell, then you do nothing, right? But this is buy, buy, buy. This is maybe not so much. Therefore, be cautious. What definitely said not so much this week were the momos. The momos got rejected today. All of it Netflix. Netflix had a doji going all day and ended up better than the rest. But you can see poster child for nastiness today was CRM. It started the day on a pop, I think almost 2% pre-open, based on some good news. Now, if you can't rally on good news, forget about it. And if you do rally and you can't hold it and end up closing down 3.5%, then oh my gosh, that is terrible news for you. So I'm looking at it's part of one of my lotto tickets to short it, and based on let's see here, can we pull it up? What did I say? CRM? Actually, let's look at it in here. Where it is. Okay, CRM. Alright, so this is an ugly candle right here. And it's still above the nice upward trend-ish area, but I don't expect anything good out of it. So I would, buy some lotto put spreads here, debit put spreads. So I'll buy them. I'm not going to short a VIA credit spreads because I probably can't get enough premium to justify my risk. So I'm going to try to catch it down here. Maybe I'll go out in time to give myself some time and pay up a little bit more in premium just to be right, or to unwind the deal and still have some premium left in it. Okay, so that would be one way of doing it. That's one thing. So, well, before I move on, I had something here on the screen, the VIX, which was part of my recap. Okay, I have the SPX saying run, the RUT, the small caps are saying no, maybe not. The VIX is scaring the heck out of me, not because it's going to be spiking or anything. It's just leaving no room for error on the bullish side. This is where we are right now. And this red line, I drew it not if I zoom out 2 years. I'm going to zoom out 2 years to show you. That's not it. Zoom out further than 2 years. I'm going to go 5 years. We're still right here. It's never been lower in 5 years, in the past 5 years. So are we going to break this 5-year trend from these lows? There is no room for error. Let me zoom out more. Can we see anything? Okay, 10 years. We're still right here. This is 10 years. Okay? So I'm not saying go out and buy calls. The lesson here is in the VIX, which is bullish. I'm bearish, the market. I'm saying that there is no room for error for being too bullish. Therefore, whatever trades I'm doing, when I'm cautiously bullish, I do a bullish trade and I offset it with a bearish one. And I'm even comfortable doing almost 2 to 1, 2 bearish to 1 bullish, because yes, we could run, but we're not going to leap forward unless, Bernanke comes back and says, wait a minute, I'm going to dump another QE or something. I don't know. So you're going to need a positive catalyst to have you leap up. But it doesn't take much to whoosh down from these all-time highs. Therefore, I'm more comfortable shorting than going long, but I'm not shorting at the line. I'll give you an example. Today I shorted Priceline via leaps. I sold leaps calls, and just minutes later they were 5% cheaper. I bought them back. I did that a couple of times this week. So I'm not going to get engulfed in some stupid trade that's close to the line with the weeklies. So in times of uncertainty, in times of confusion, I want to take advantage of the elevated level of premiums because of the confusion, not because of the VIX is high. And I sell premium, but I give myself a lot of time so I can have a buffer. I can build a 20-30% buffer, whatever I want, when I go to the leaps. And I still have huge premiums. And worst case scenario, you can unwind it with minimal damage. You're not going to get engulfed. Very unlikely to get engulfed. So this is why I pointed out the VIX. Okay, the picture, overall picture looks pretty good. You know me, I always say there is no doom that I see with the variables that we have right now. There's no doom. We need a new shoe to drop in order to get doom, the doom that everybody's talking about. We had corrections that are localized. We had them in the NDX. We had in the tech, whatever you want to call new tech, whatever you call them, and you also had them in the momos. Sometimes they overlap, but for it to fall apart, we need a new doom. What is it? China, maybe. Maybe they're 5-6%, not 7-8% growth. This weekend we have some news from China. I think Saturday night. I think factory output or something. If that comes out terrible, we'll have weak Monday. So talking about Monday, I think today was really a negative day, and the SPX and the Dow being at all-time highs clouded that fact. So this, I'm going to call it a negative day, and this negativity is going to carry some downward pressure into the Monday open. All headline, all other headlines aside. Now, if we get any headlines one way or another between now and then, all bets are off. But I think we're going to open up with downward pressure on Monday. People have went crazy today, this week, over exuberant. I think they got caught up in the Apple love. Another thing I said, a resurgence for the love for Apple. Now I get hammered on Twitter sphere. By the way, I don't know if you saw I put it up. You can follow me on Twitter. RacerNick is my handle, and or StockTwits, or both. I tweet on both. And this is my email, sellspreads@gmail.com. I get back to everybody. So reach out to me, either that or through the actual MarketFi. If you want to sign up, it's free, and you can get messaging directly to me, and I respond to all of those as quickly as possible. Okay, back to the task at hand. So the idea is to try to game plan next week with the givens of this week. Apple was really clouding the picture because it's such a big heavyweight, and everybody's out loving Apple, and of course all the penguins come out and say now that recommendations, buy, and raise price targets. I've even seen over 700. I've said the closer we get to 700, the less bullish people are going to get. I think the damage was done so bad at the 700 level that people still have scars, really big scars, and some of them are still trapped in it, and they may choose to get out, even with a $50 loss versus a $200, $300 loss before. So they'll be happy with that. So that's a caveat on Apple. This morning we sent out levels on Apple, and they were, I just noticed, 633 with a close. Oh my gosh, we said 633, 630 to 632 and a half is the neutral zone. 635 is the start of resistance, and then it ran to 644. But I also said that there's no logic in Apple this week because of this extreme love. Sure enough, it closed exactly almost where we expected it. But to the point of Twitter, I was starting to say is that now when I tweet something that could be perceived as negative to Apple, even though I'm not negative Apple, I get bombarded, and I even lose followers. So that tells me that everybody's emotionally invested in Apple. So the blind side is due to downside on SPX and Apple, in my opinion. If the love is back and we're back to normal, guess what? Normal for Apple was run into the event and sell the event, and that includes next week's whatever and the split. So just be prepared. If you've got profits in Apple, book some, buy protection, do whatever you want. I won't short it. I was out of it. I recommended we be out of it because unpredictability, but I still covered it and still delivered the levels that I perceived as clear as possible, although they weren't clear, and that's why we stayed out. So anyway, those are the big drivers. What to do next week? Well, what to do is we had a lotto ticket this week from last week, and it paid, and we want to see if we can pick another lotto for next week. The lotto, by the way, last week was Twitter, right? Go Twitter, because somebody's going to figure it out. Wham! It had a fantastic beginning of the week. Next week, I see lottos everywhere I look, and they're all debit put spreads. I don't see any good news. I think the blind side, next week we're set up for a good blind side. If not, it's going to be a rip-roaring rally. But So there's no in between. So it's going to be a violent week. And I think the decks are stacked against the bulls. And I don't think they know it. Maybe I'm wrong. The reason is it's the ECB event is probably the biggest one. Everybody's concentrating on jobs. I don't think the jobs is going to be as big as the ECB event. It's a no-win situation. It's a lose-lose situation. If Draghi comes out and gives any kind of QE and or cuts rates and both, then the markets might, if he's aggressive because he's been talking so long and he feels like he needs to deliver, then the markets will read into, oh my gosh, what's he seeing that we're not? Sell, sell, sell. If he doesn't do anything, I think there's enough people who bought the market based on the fact that he's going to do something. They're going to be disappointed and they're going to sell, sell, sell. That's my instinct. I don't have any science behind it. This is just my theory. Not enough to trade the week, enough to line up a few lottos, like a CRM bearish position. I had a caterpillar position that we closed out on a many times over as far as investment. Yelp we played also. We're going to try to find things like that. Maybe by the Monday open interest data when it comes out, I'll have more specific ideas. For Netflix, I'm going to buy something in the 390s, 392 or something like that. Little longer term, I'm going to look at the Nasdaq and the NDX somewhere around the 3650. Yes, that's miles away from where we are right now, but I see something that just gives me a hunch, just like the hunch in Yelp yesterday, that there's going to be $2 drop, and it hit my number on the nose. I exited a little too early in my short, but I'm not going to cry over money left on the table. So I see something in the NDX. I hope I'm wrong, but I'm going to go out to June or July and put some a bearish play that would benefit from a whoosh down to 3600. So that's me being very pessimistic, but this is not a full-blown position. This is lotto tickets, people. Lotto tickets. When you have such uncertainty, it's not a time to go in all in. You have to be a sniper. Try to find plays that cost a few $100s but can make you thousands, or double your money or triple your money, and give yourself some time when you're not so sure. When you're very sure, like I was in the Yelp, or at least not sure, I was very specific to the one instant, so I had to tailor it and stick to my gun on it. So being a sniper next week will work. Last week we said, okay, for this week we should play momentum, names like Apple and Netflix. I mentioned those two specifically, and guess what? You got paid handsomely if you participated in those. I should take my own advice sometimes. So also the sniping for this coming week will be almost the flip side of that. I think that the momentum names are going to get hit hard. I think CRM, Salesforce.com, put a bad taste in people's mouth. So let's see what happens on Monday. I don't want to keep this long. I tried to keep it short. Whatever I do, I'm defending it somewhat. So if I'm bullish, I'm definitely shorting something, and maybe even more than I'm bullish. If I'm bearish, I will definitely put a bullish position just to offset. And I'm hesitant to doing that because I just can't shake the hunch that we're going to have a whoosh down somewhere, because this over exuberance cannot be explained based on changes in fundamentals or changes in the variables. It's just sentiment. And when there's sentiment, when it's people's feelings are involved, like in the Apple trade, all kinds of stuff happens. I need levels, and when I don't have levels, clear levels, I don't play. I had levels on the IWM, I had levels on the RUT, I had levels on the SPX, which, by the way, everything played out almost to a T with the ranges. And you can play otherwise, if you don't have levels or ranges where you're certain to a certain degree, actually, then it's throwing darts. And throwing darts, yeah, you may win some, but you're going to lose one or two, and that cost you money. So this would be it for this week. Again, this is Nick Shaheen on Benzinga and MarketFi. Create income with option spreads. Would love to see you there. The community is absolutely awesome and growing. Thank you very much for making it a successful community. And if you're not part of it, give it a shot.